morning and welcome to The Street on BNN Bloomberg. I'm Roger Peterson. Thanks very much for joining us. Coming up on the show today, Greg Taylor, Chief Investment Officer at Pender Fund Capital Management, is in studio. He made it through the snowstorm to join us here in Toronto to help us break down the latest news moving the markets. And of course, we want to hear from you this morning on First Call. Reach out with your questions and we'll have Greg answer as many of them as he can at the end of the show. The number, 1-855-326-6266. We'll open the phone lines in about 30 minutes. Also, our email address is firstcall@bellmedia.ca. Now, some of the stories we're tracking for you in the BNN Bloomberg newsroom. Canada's housing market ended 2025 on a slide as both housing prices and sales were down, according to data from the Canadian Real Estate Association. The benchmark price dropped by almost 0.5% in December, a 4% year-over-year decrease. Analysts point to continued economic uncertainty as a main reason for the drop. Bloomberg is reporting that Chinese Premier Li Qiang told Prime Minister Mark Carney that China is interested in pushing forward on boosting trade and cooperation. This report coming after the Prime Minister landed in China yesterday looking for further discussion. Carney and the Premier signed cooperation documents which centered around energy, construction, and public security. And take a look at the Taiwan Semiconductor Manufacturing Company. It's reported they plan to increase capital spending by as much as 40% this year. This plan by the world's largest semiconductor producer came after its latest quarter showed a more than 30% jump in net profit. The outlook has seen a reviewed outlook from analysts in the AI space. And now, our top line story. The governments of China and Canada unveiling a series of cooperation agreements on Thursday, including one with the goal of expanding energy trade. However, the documents signed did not mention tariffs on canola, electric vehicles as well, which of course are the two biggest trade irritants between the countries. For more on how this trip is shaping the markets and get his opinions on this, let's bring in our guest co-host, Greg Taylor, Chief Investment Officer at Pender Fund Capital Management. Greg, thank you for joining us in studio.
Oh, thank you.
For the rest of the country, we've got a nice big, well, maybe it's relative. It's a good Toronto snowstorm
It's a good
right
Toronto.
now.
I think it's a relatively good Canadian snowstorm.
Yeah. It's a decent one. It's lovely outside, but it's slow and you joined us. So Thank you for getting in here. What do you think of these announcements? Are they much ado about nothing, or are there positive signs from it?
Well, we have to see the details. And first off, it's a positive sign they're even talking. And we spent all of last year talking about trade wars and tariffs going up everywhere. And it's nice to start the year with some deals getting done, because we do know from comments from President Trump that he doesn't seem to be interested in renewing NAFTA or USMCA in Canada. So if they don't want to trade with us much, Canada has to find new trading partners. So we might as well go to one of the biggest economies in the world and do some deals. And
it's so tough with Trump, because it's like he doesn't feel like renewing CUSMA this week. We'll see what happens next week. So it makes it difficult to try and look at these outside negotiations. And I guess we do have to be careful about not selling ourselves short when we look for other deals. We don't want to look desperate going to places like China, because they'd be happy to take advantage of us, I think.
Oh, absolutely. And we're not in a great position. So I think everyone knows we need to do deals with our largest trading partner starting to be a little more aggressive against us. So whatever deals we can get are going to be positive. And you're right, President Trump, who knows how long deals can last, and he could flip his script tomorrow, for all we know. Because it's a midterm election year, and he's going to do whatever he can to win some votes. So whether getting a deal done with Canada is going to do that, or standing tough against us might be the stance. So never know what's going to happen with the Americans, so might as well go and do some deals with other countries.
Now, with China, there was talk with energy to continue strengthen talks, I believe is the term they used, when it comes to oil and gas, resource development. Now, what does that mean? Deals are going to happen, or is that just right now we just kind of have to take that as it is?
Well, it is what they need and what we produce. So it's kind of something that has to happen naturally, and hopefully this will speed up the ability for Canada to get more export capacity out there. It would be nice to get some more LNG export terminals built, more pipelines built, so we can access to secondary customers and not just sell to the Americans. So I think they're saying all the right things, but again, it's going to come down to the details, see what actually is announced and whether we can actually get it in paper and start shipping stuff.
I'm just imagine thinking that we flip with Venezuela, and Venezuela is now shipping to the U.S. and we're shipping to China. Would this be the impetus, you think, for to expand the pipelines and push it through?
Well, it could be, and you bring a good point that Venezuela was shipping a lot of their oil to China. Now, if that supply is up in question, maybe China is looking for something to fill that gap, and Canadian oil is something that we should be able to get to the Chinese market. So, yeah, we do need pipelines, we need offshore capacity, and I think that's going to be something that everyone's starting to come to the table to realize, and something we should have done 20 years ago, but no time but the latter, right?
Now, and I mean, the talk has been focused on canola. That's been the big one, and the EVs. But do you see other opportunities for China that Canadian companies might be able to take advantage of?
Well, certainly the agricultural sector for sure is going to be something we can look at. So canola is something that we do want to get a deal on, and I think that's something that should happen this year. EV is a trickier one because that's involving a lot of technology, and I think that's become more of a hot potato with the U.S. So probably less design will do with the EV deal, but I think technology in general, we should be doing a lot more things, and Canada as an economy is still really struggling with some of the U.S. trade ties. So anything we can get and sell to that market, I think we should do.
And what opportunities, though, do you see beyond those two things? Or do you see other opportunities to go to products that we could be shipping to China? I mean, they opened up, apparently we can start shipping dog food.
Well, it's whatever we make, we should be trying to sell to China, I think. So there's opportunities here. Lumber is certainly one. Beef is something we should be looking at exporting. So I think energy is going to be the first one. Uranium is certainly something we can look at exporting more to them. And I think that's where we're going to start. But Canada as a country should be open to any deals we can do.
Okay, I mean, and there are some opportunities for, like when you look in Ontario, uranium, the Ring of Fire, and the critical minerals, but also nuclear as well. I mean, we were at the forefront for nuclear.
Oh, absolutely. The CANDU reactors are still some of the best in the world, and we need to really get this technology out there. I think the tide has changed on uranium and nuclear power, and I think with the whole power demand going up, we need to get more of this out there, and the CANDU technology is proven, it's been safe, and I think we should be building more of it throughout the world.
Okay. And when overall, at the end of this, will there be any big signings, do you feel, or is it just going to be, let's just kind of feel each other out and kind of get things back on the right direction?
It's probably still early days, so I don't know if we're expecting anything in the next 24 hours, but certainly we're heading into Davos. So there's going to be potentially more deals done there, and I think just in this year, again, is starting off way better than last year, where it seemed to be more trade wars than anything else.
Okay, we'll wrap it up there, but we've got lots more to talk about when we come back, including infrastructure and defense spending and why you need exposure to both in your portfolio. Stay with us. And we're back now with our guest co-host, Greg Taylor, Chief Investment Officer at Pender Fund Capital Management. And Greg, you say portfolios need exposure to infrastructure and defense spending. Bigger picture, why those two?
Well, I think this is a theme that's going to be around with us for a while, and I think it came on the scene really last year, and the defense in particular had been an area that really had been shunned for a while because it was under ESG mandates. People thought, well, you shouldn't have defense and such. But I think everything's changed. We've seen with the Russia-Ukraine war, we've seen with some of the tensions in China, and certainly what's going on in the Middle East. We're seeing, and also with the whole increase in NATO spending. This is a market that really should be a defense. It should be in everyone's portfolio, and it's definitely one of the growth areas of the global economy. Canada has committed to get to 5% of GDP for spending to meet the NATO target, and that's something that's going to require a lot of investment in the country. So this is something that I think is going to be a theme for a while. There's going to be a lot of capital put into this, and I think Canada has some great companies in this area that should be able to grow from this. Okay,
let's talk a couple about those, and then we'll get into the infrastructure side as well. And of course, just everything that's happening with Greenland, the U.S., it just has us all thinking about defense a lot. One of the ones you're liking in this sector is MDA. They just signed that new space deal with the U.S. Missile Defense Agency. So
yeah, MDA is probably one of the leaders when people are looking at this and trying to think of what names you can get access in your portfolio. They do constellations for satellites and different communication networks, and space is going to be an area that's going to be with us for a while. So there's been some volatility in MDA with concerns about whether they would lose some contracts to the U.S. government, but I think it's again bouncing back nicely here, and I think MDA is a stock that is one of the leaders in Canada and has the potential to export some of these products to other countries and has a good growth market ahead of it.
And any long-term deals on the way for them right now?
Well, absolutely. They're looking at some long-term deals, working on some of the big satellite versions. And I think satellite communications is only going to grow, and there's going to be so many networks built. It's not just going to be SpaceX that's out there. There's other ones going to be out there, and Telesat is one, and MDA is one of these companies that's going to be providing technology to this.
Okay, another one you like is Telesat. There you go. You just mentioned it.
Telesat, again, building one of the constellations. This is a Canadian success story. It's done well for it to go, and it's going to keep growing. I think this is, again, more constellations are going to be built for satellite communication. Telesat is one of the leaders in this, and a Canadian success story that should be having a good runway to keep going for the next few years, and re-rating as more people sign up to the network.
Okay, and the third one, Kraken, we hear that one, actually all three I think we're hearing on a more and more regular basis. Kraken Robotics really seems to be finding its feet.
Oh, absolutely. And I think when people are coming to defense spending, I think everyone was scrambling last year to try and figure out what can you buy and where can you get exposure. And Kraken's one of the first names that jumped off to the list of this. It's a submarine sonar detecting company based in Newfoundland. And this is one of the pure play defense companies in Canada. And I think it's gotten that re-rating. Now there's going to be volatility and lumpiness in the contracts, but this is a company that's proven that the good technology is signing deals all the time. And I think is selling also to the Americans. So this is one of the ones that really kept going, but I think it's going and has a good potential to keep going further.
Okay, now infrastructure was the other one we were talking about. That's with the government making all kinds of promises. What do you like about it, and what are some of the concerns?
Well, I think this just goes back to, and when you look at defense spending and some of the concerns we've had with just the relations with the Americans, we need to get more infrastructure built in the country, whether that's energy export, whether it's upgrading the rail system, whether it's whether working on the Port of Churchill. So I think infrastructure spending is going to be with us for a long time, and I think this is going to be something that Canada is going to be having to really catch up on. I think we've delayed some big projects for a while, and I think this is now an opening that we have to really get these going, and infrastructure spending is going to be massive, as we're already seeing with the budget that just came through. There's a lot of big projects. Ottawa does seem focused on getting these done and hopefully can fast track these projects. So if that happens, there's again going to be a lot of money put into this, and this is great for the country and good long term. So there's a lot of talk. Hopefully we see some action and these can get built.
Yeah, I was going to say, any concerns that some of the, these projects, governments love to talk about things, but sometimes they don't get built.
Well, I think that's a big frustrating, because we've also had those mines that were given a fast track status, and trying to get them going is something that's going to be critically important, and they should be fast tracked regardless, because it's taken so long from exploration and discovery to actually production that you don't want the government getting in the way to slow this down. These things are critical for the country and critical for the economy keep going.
And now, I mean, we got the base companies that we will see will benefit from this, but are there some surprising sectors that you're looking at that will benefit from all this infrastructure build out?
Well, I think at the end of the day, it's going to help the entire economy, and this is going to help the banks in particular as well, because the bank, when there's so much spending out there, it's going to see more lending potential, and this is going to be great just to keep the whole thing going. So I think this whole move towards defense spending and infrastructure spending is going to have so many knock-on effects to other parts of the economy, and hopefully can keep the economy going, which really has lagged for the last few years.
Okay, and with that lag, where do you see the catch-up coming the biggest? Is it? I mean, the banks are always up there. What other sectors might you see that catch-up?
Well, I think the sector that really lagged last year was energy. So energy has been a frustrating sector for a lot of people in the last year because it hasn't done too much. And we've always talked about that discount that we sell our oil to, because it's only going to the Americans. So there's always the WCS discount. So hopefully we can contract that by getting some more offtake capacity and getting other markets and other customers and potentially exporting into China or to Europe. So I think there's a lot of knock-on effects that can be positive to trying to broaden out our trade. And at the end of the day, this might be something good. The Trump attacks for us might actually galvanize us and get some more projects built in the country. Yeah,
I think it's making a lot of companies take a look at how they function and what do they need to tighten up and be better at. So it never hurts to have a little wake-up call every once in a while.
As long as we do something about it and not just sit there and complain about it.
Absolutely. Okay, we're going to take a break right now, but up next we'll be back with Greg and to see why energy stocks are on his radar. Okay, let's take a quick look at the markets this morning. We'll start with the U.S. futures. Tech stocks are moving today. Of course, on the reports of TSMC announcing record capital spending and looking at soaring profits as well. Also, they're keeping an eye on banks and weekly jobless claims right now. You can see the Dow off slightly, pretty much a wash, but the NASDAQ is up by almost 0.9%, and the S&P 500 5.4%. Heading to Asia. And the Nikkei off by 0.42%. Tech names like SoftBanks and chip-related stocks dragging it down. Still in record territory, though, but it was up by 0.42%. Hang Seng down by 0.28, and the CSI 300 up by 0.2. Off to Europe now, and a mixed bag there. The FTSE continuing its move upwards into record territory, up by 0.4%. Upbeat data, strong earnings pushing the markets there. But the CAC Quarante off slightly by 0.18, and the German DAX right now about a wash at this time. And the TSX, after struggling most of the day yesterday, managed to end up with another record high led by energy and materials. It was up by 0.14%. Some of the winners and losers from yesterday. Taseko Mines up 12%, Nutrien up 8%, Shopify down by about 6%, and Aritzia off by 6.3%. And looking at metals, you can see there's a bit of a pullback going on right now after those massive runs we've seen, some profit taking. Everybody in the red right now. Gold off, still in and around record territory at more than 4,600, down by half a point. Silver is off by 2.34%, so down below 90. It had been up into record territory. And copper down below $6 with a 1.6% drop. And looking at oil, Western Canadian Select. Geopolitical concerns easing, but it still jumped yesterday, 2.26%. And what's WTI doing today? It is off. Look at, there you go. That's that pullback going on right now. It is off 4.5, almost 4.6%, down below 60 again after surging the last few days. It's down at 59.18. Time to see what's on the radar for Greg Taylor, Chief Investment Officer at Pender Fund Capital Management. And Greg, there's some energy stocks you're liking right now. We need some energy right now with the snow we're getting here. Yeah. First up, I just lost it. Next Gen, right?
Yeah, and so the energy stocks in general have lagged because oil's been under pressure, natural gas hasn't really done too much. So, but within the energy sector, you've got uranium. And I think uranium is going to be a trend that's going to be with us for a long time. Mm-hmm. We've talked about this with the whole flip in ESG from having uranium and nuclear power looked as a bad thing to now becoming a positive thing. And with the increase of demand spending from AI, energy infrastructure is just going to be growing everywhere. We're seeing a lot of people switch to uranium and nuclear capacity is going to keep going higher throughout not just North America, but Europe and Asia as well. And Canada has some of the best-in-class uranium deposits and companies in the world. And I think NextGen is going to be the next big deposit out there. This is an exploration story that has a mine that's being permitted right now in northern Saskatchewan. This is the largest, highest-grade undeveloped uranium deposit in the world.
Is that the Patterson Corridor?
It's in the Athabasca Basin,
okay.
The Arrow deposit. They've done their first round of permit hearings. The next round's in February. And I think that we're going to get a big re-rating once they get these permits done in February. And with the government in Ottawa saying everything about fast-tracking mines and really getting these going, this is a perfect deposit for the government to get behind and really trying to make this project a success. They've gone a long way, and they're really on the finish, on the 5-yard line right now, and hopefully can push this through. And this is going to be a project that we probably will be a huge success for Canada. And whether it's going to be something that NextGen builds or is acquired by Cameco or some of these other neighbors, mm-hmm. I think it's going to be a great company for the next few years.
And I was asking about the Patterson. There was just a news release out today that they're expanding their high-grade subdomain at Patterson Corridor East. They just released that this morning, so I guess.
Well, I think there's exploration beyond. They've got the Arrow deposits, the big one they're working on, but there's other targets within the same area and within the company, and I think those aren't really priced in the stock right now. So NextGen looks like a good one that can keep going, and I think has been a success, but has a lot more runway ahead of it.
Okay, next up, ISO Energy.
So very much related to NextGen. NextGen actually owns 30% of ISO Energy. This is another company with exploration projects in North Saskatchewan, but they've also got some interesting projects in the U.S. And certainly with President Trump and the Americans looking at fast-tracking production within the continental U.S., ISO has a property within the U.S. that they can actually start permitting on. Mm-hmm. And I think if you do start to see the U.S. government put more muscle behind fast-tracking these, maybe putting a floor on the uranium price to try and incentivize demand production coming, ISO's in a great spot for this. They have a property that's in Virginia, so close to where a lot of the AI data centers are. So the whole AI demand is going to keep going, and if you're looking for U.S. exposure to uranium that hasn't really run that much, ISO is a stock that should be on the radar.
And any concern, I mean, we're talking a lot about nuclear to power all these data centers and things like that. Any concern, I mean, those are 10-year setup plans to get those up and running. Any concern interest might wane?
Well, you never know, but there's also so much money being put into this. And once you get the capacity to start to build a nuclear power reactor, the uranium price you're putting in is going to be kind of marginal at the best. And once they put the capital in, billions of dollars to build these, they're not going to turn it off if demand shuts down. So I think we're going to need so much power. We're going to need nuclear gas. We're going to need solar. We're going to need wind. All of it's going to be needed as power demand keeps going. So I don't think demand's going to wane that much, or interest will either.
Okay. And the last one, I'll look at Evercore.
Yeah, so switching topics here, this is more on the theme of M&A. And I do think M&A is going to be a big theme for 2026. And with that, you want exposure to the banking sector. And Evercore is one of the leading investment banks in the U.S. and globally. And as we've been seeing these big U.S. banks report in the last few days, investment banking, capital markets has been a growth area. Evercore is a pure play on this. And this is a company that did well last year, but should be setting up to do well. And anytime you're hearing big M&A themes, companies like Evercore are going to be getting a cut on this on consulting deals.
I'm just looking at some of the bank because Goldman Sachs reporting today, increasing dividends to $4.50 from $4. Morgan Stanley, just pulling them up as I'm looking at it. For Morgan Stanley, I think having a good report as well. Don't have a lot of other details on it. So the banks are looking good, aren't they?
The banks are looking good, and within the bank reporting, investment banking and capital markets has been a growth area, and Evercore is a pure play on that theme.
And any concern like the banks can get into that range, which seemed to happen with the Mag 7 the last little while, like they're delivering, and they're delivering above what was originally expected, but it's almost, it's so good that everybody wants it to be gooder.
Well, and that's always the problem. It's a good word. And that's the problem you hear and we're starting to see that with some of the initial reports we've got from JP Morgan, which was a good number, but the stock traded down. And I think that's something that happens when stocks have had such a good run last year that they're almost priced for perfection. So you need to beat to have things go higher, and you need to surprise markets. And it's hard when everything's had such a good run and it's trading at higher valuations. So earnings season can be tricky to trade around because it's all sentiment driven more than anything else. But but it's also things are going the right direction, and I think that's going to be a theme that's around us for the entire market, because when you've got a market that's coming off multiple double-digit positive years, valuations are getting stretched. So you need to find earnings growth, and you need to find things that are going to surprise to the upside. Okay, we'll leave it on that note there, but still ahead, our phone lines will be opening soon for our first call segment. You can reach us at 1-855-326-6266. Also email us, firstcall@bellmedia.ca. Chinese Premier Li Qiang reportedly told Prime Minister Mark Carney that China is interested in pushing forward with boosting trade and cooperation with Canada. A report coming after the Prime Minister landed in China the other day looking for further discussion. Carney and the Premier signed cooperation documents which centered around energy, construction, and public security. The Taiwan Semiconductor Manufacturing Company has reported that they plan to increase capital spending by as much as 40% this year. This plan by the world's largest semiconductor producer came after its latest quarter showed a more than 30% jump in net profit. The outlook has seen a reviewed outlook from analysts in the AI space. Goldman Sachs broke an all-time Wall Street record after posting equities trading revenue that surpassed $4.3 billion in the final 3 months of 2025. This breaks their own record, which they set in the second quarter of last year. The record-breaking performance saw the bank increase its future targets as well as dividends per share. Morgan Stanley capping off a record-breaking year with a 90% plus increase in Q4 revenue from its debt underwriting. The revenue beat analysts' expectations by more than $100 million. Reported earnings reflected the bank's push for debt capital markets, which put major emphasis on AI investment. And looking at the futures right now, you can see some reaction on the NASDAQ to what's happening with Taiwan Semiconductor. It's NASDAQ is up by 0.88 right now. And the Dow is still in the red, down 0.13, but the S&P 500 looking to bounce back. The last couple of days have been a little rough. It's trading up right now, 0.3
0.39%. And our guest co-host today, Greg Taylor, Chief Investment Officer at Pender Fund Capital Management, is still with us, and he has his eyes on the metal markets because what an interesting market it has been.
Yeah, finally, the commodities are back, and everything's always better when the commodity cycle hits, especially for the TSX. And we saw that last year with gold and silver and having a great year. Copper's starting to join the party, and it feels like this is a theme that could be around us with us for a while. It does seem like, from the American point of view, they're starting to realize just how bad their balance sheet is right now, and how much of a problem that is. And I think at the end of the day, it's going to result in a lower U.S. dollar. And certainly, President Trump has been out there almost advocating for a lower dollar and more rate cuts. And this, at the end of the day, is good for real assets. So real assets being things that come out of the ground are going to keep going up in value. And I think that's what's really gotten the gold and silver stocks going. And copper looks to be going. And as the economies globally keep going, copper has the added beneficiary of also being a good industrial metal. So the theme for commodities, I think, is alive and well. It certainly was a winning sector last year. And some of these stocks are probably a little frothy in the short term. But it still seems like it's got a bright future ahead of it.
And with gold, I mean, it's a safe haven, but if geopolitical concerns kind of ease a little bit, we're seeing that looks like Iran might be calming down a little bit, Venezuela, and I guess the big one would be Russia and Ukraine right now. And yet, with everything else that's going on, which way do you see gold? Is it going to get tugged by those things?
Well, I think even just looking at a supply-demand economics, like you're seeing a lot of demand coming up. So you've certainly got it as the safe haven assets. We're seeing global central banks just keep increasing their stockpiles of gold and silver as they're starting to second guess where they should have all their reserves in U.S. Treasury bills. So gold demand is going up from people investing, from savings, but also central bankers. And then on the other side, there's just not a lot of supply. We've had almost a decade of no real exploration happening in the gold stocks and in gold companies. So they haven't really put any money into finding new deposits. They're not building a lot of new mines. There's not that many coming onto production. So demand's gone up a lot. Supply hasn't been able to meet that. And what you do is the prices go higher. So I think that's something that can't be fixed too fast on the supply side. And with demand not looking like it's going to slow down anytime soon, gold prices look like they can keep going higher.
And so do you look, from the investment side, do you look at gold or do you look at the stocks?
Well, I think that the gold stocks had really lagged the commodity for the last little bit. So, but then they really played catch up last year with a lot of stocks doing quite well. But I think within the gold sector, you can do a lot of rotating. Certainly, there's always a phase in cycles of this. The large caps and the royalties always lead. So they had big years last year with Agnico and some of these names going up multiples. But then now I think you can actually go down the path to more the mid cap names, some of the junior names, because these are companies that I think have really been off the radar for a lot of people. And there's some good projects coming on there. And the seniors, which haven't been doing exploration, are going to have to start acquiring these at some point. So I think there's still going to be some interesting opportunities in the junior resources and junior golds. And I think that's the rotation you have to play with in the sector. Which will be good for Canadian companies, I imagine. Oh, absolutely. I think with geopolitical risks going up globally, I think people are looking at safe supply, and Canada still is one of these safer countries to operate in. And with the weaker dollar, is that good for those companies, or is it what kind of an impact does that have? Weaker American dollar. Well, it's a weaker dollar. It's not going to impact much on the cost side point of view, because really what they're seeing right now with gold prices up these levels, the operating margins of these companies are just tremendous right now. So the big inputs are labor and oil prices and energy, and that would be under pressure. But at the end of the day, when the gold is at this level, a lot of these projects are very economic. All right, and let's talk about the forgotten sister, although not so forgotten right now. Silver is on one of its wild swings again after kind of steadily going, but boy, the last month or so, excuse me. Oh, absolutely. Yeah, silver's almost gone parabolic, which is what silver does. And silver has a lag impact. And I think last summer, everyone was pointing out the disconnect between the gold-silver ratio and how it is at extreme levels. And well, that's caught up a lot in the last little bit. And this is a commodity that has a history of short squeezes. There was one in the 80s with the Hunt brothers, and silver took off at that point in time and didn't really do too much for the next few decades. But that's the thing. Can we pull up like a really long term, like a 30-year, just to, because you can see some of those dips that we're talking about, right? Yeah, it's a volatile metal, but it's also, again, seeing a ton of demand right now. And it's not just from an investment point of view. Silver also has the ability to be an industrial metal, and the solar panels are going up in demand. This is something that you're going to see a lot more demand for silver as well. So silver's got that industrial and also the precious metal quality, and again, not a lot of supply out there. There's not a lot of pure silver mines, and it's usually a byproduct, but it's going on one of these runs right now, and who knows where it's going to end. All right, and I mean, there's tons of copper, though, what is the other one everybody's talking about because AI.
Data centers, the build-outs, copper is needed, but copper mines, again, another one that's not easy to come by.
No, absolutely. And there hasn't been a lot of exploration going on in copper again. So we're seeing a few copper mines coming on in Canada. Foran's got a project that's going to start later this year. But there's not a lot of big supply out there. A lot of it comes out of South America. There's been geopolitical problems in South America of late. But copper is also like the fuel for the entire world economy. So as things start to get going, China starts to reinvigorate its economy, copper demand is going to keep going higher. And as you mentioned, the AI data center demand, the U.S. grid, well, the Canadian power grid needs to be redone, and that's all copper. So copper's looking like it's set up for a fairly good run here. And again, there's just not a lot of supply out there, and demand just looks like it's going to keep going.
Is there the possibility we could see copper soar? Because we need it. Gold we can kind of live without, but copper, if we want power, if we want anything, we need copper.
Absolutely. Copper's in almost everything. So it's going to be hard to replace, and I think there's not a lot of supply out there. So yeah, copper could keep going, but that's going to keep inflation up too. So it's kind of one of these balances that you want it to go, but you don't want it to go too far because that's going to start to be a big cost pressure.
And then just before we go, just a couple other metals that maybe people aren't noticing, but should be keeping an eye on?
Well, platinum, palladium are definitely having good runs as well. So they're starting to see some demand there. And then outside of that, it's really the rare earths have been the big talking point. Mm-hmm. We're seeing that with graphite. Graphite's been another commodity that's catching some attention. There's some good projects within Canada and Canadian companies involved in that. So the rare earths are getting some attention, but right across the board, we're seeing commodities have a pretty good run. And they were the stars last year, but they're looking set up to have another good year this year.
Okay, we'll wrap it up on that note there. But still ahead, today's market drivers with Bloomberg's Monique Malima. And of course, our phone lines are open. Greg Taylor, Chief Investment Officer at Pender Fund Capital Management, is taking your calls. You can reach us at 1-855-326-6266. And of course, email us, first call, at bellmedia.ca. Let's take a look at some of the early market movers now. We're joined by Bloomberg Equities reporter Monique Malima. Monique, thanks as always for joining us. First up, Coinbase dealing with the Senate.
Hi, yes, thanks for having me. So Coinbase, their shares are down this morning in pre-market trading. The U.S. Senate is currently looking at a market structure bill for crypto. And this was a bill that was expected to really benefit some of the big crypto players like Coinbase and Galaxy Digital. But the Senate announced that they are delaying the vote on that bill. That was supposed to be happening this Thursday and is now being pushed out. And Coinbase also announced that they're pulling support for the bill. The bill had some amendments added that were going to limit stablecoin rewards that companies can offer. And this was a big part of why Coinbase pulled their support. They receive a good revenue boost from stablecoin rewards through their partnership with Circle Internet Group's stablecoin. So this is something that's really weighing on the crypto space as a whole. Some analysts are saying now this might make the bill less likely to be passed. Coinbase would like to see those amendments removed, but those amendments were part of what got some Democrats to sign on to support the bill. So there's a lot of uncertainty ahead around how this is going to proceed going forward with this bill, but some are saying it could take weeks or possibly even longer to resolve.
Okay. Talon Energy is next on your radar.
Yes, so Talon Energy, their shares are up this morning in pre-market trading. They announced that they were buying about $3.45 billion of natural gas power assets from Energy Capital Partners. And this is going to be to grow the company's energy base. This is going to add a number of gigawatts of power, and it is expected to be immediately accretive to their cash flow. This is getting a really positive reaction from shareholders, as this is going to help the company continue to grow its energy business.
All right, and last one up is Samsara? How do you pronounce that? Samsara?
Yes, so Samsara, Their shares are up in pre-market trading this morning after BNP Paribas upgraded the stock. The company works in both hardware and software, and they had been seeing some pressures on U.S. tariffs on the hardware side. So some of their clients had been kind of pulling back and pausing on their purchases while they were waiting to see how tariffs play out. But now analysts are saying that that demand is starting to return. More clients are starting to back with their purchases again, and that's going to really help push this company forward to see more growth coming into this year. They also see continued strength in hardware, also from the ability to kind of safeguard against AI. The software business might be a little more susceptible to replacements with artificial intelligence or companies kind of automating some of their processes. But they say the hardware business really doesn't have those same issues right now, so it's going to still see continued opportunities.
Okay, we'll wrap it up there. Monique, thanks as always for joining us. Bloomberg's Monique Malima, she's the managing editor for Breaking News in the Americas. Still ahead, we'll take a closer look at one of the notable analyst calls and recommendations moving the markets. Nutrien. Okay, let's take a look at some of the notable analyst calls and recommendations. Nutrien shares rose as much as 8%, the biggest jump since March of 2020 on Wednesday after Morgan Stanley upgraded to overweight from equal weight. The analyst notes higher earnings and potash demand. Shares touched the highest intraday price in more than 2 years as well. Nutrien has 12 buys, 10 holds, and 3 sell ratings among analysts tracked by Bloomberg, with an average price target of $67.26 US. Let's get Greg Taylor's thoughts on this. He's the Chief Investment Officer at Penderfund Capital Management. What do you think of this news?
Well, it's interesting. I think we talked about commodities having a big run last year with the golds and coppers having that. And I think people had forgotten about the agriculture sector. And Nutrien was a big company for a while, and I think a lot of people had exposure to it, but hasn't really done that much in the last few years. And I think, again, had been off the radar. But And also we caught up with some trade wars as well as potash and some of the commodity fertilizers got caught up with the trade wars last year. But this seems like a company that might be turning the tides here, and then it should be probably on people's radar. And this is an interesting upgrade, and I think will catch a lot more of attention. And people should do their homework on the stock and might have to take a second look at it.
And I imagine if there's a deal with China that's only going to help it as well with potash.
Oh, absolutely. That's one of the big export markets for this company. So it's, again, a company that has been off the radar and people might need to take another look at it.
And it'll be interesting because looking at building its terminal down on the American side of the border on the West Coast. I wonder if that's helping down in the States as well.
Well, it could be, and this is a global leader, so it's got a broad asset base, and a lot of Americans invest in this company as well. So they got to play both sides of the border, and I don't think they want to get caught up in any of these trade disputes, and you certainly don't want to get on Trump's radar screen anytime soon.
I don't know if nobody. I don't think anybody wants to be on Trump's radar.
No, exactly.
You just businesses are learning a new art, aren't they?
It's a new how to avoid Trump and probably get out of his tweet storms.
Yeah. Well, we saw it with the oil execs when their meetings on last week with them about Venezuela. All right, on that note, we'll leave that there. But when we come back, Greg is the Chief Investment Officer at Penderfund Capital Management, of course. He's going to take your questions on First Call. Time for First Call and first email, actually, and this one's from Peter. And he says, Greg, what are your thoughts on ARX for the next 12 months? It's been slipping away. Buy, hold, or sell. We were talking about it earlier.
Yeah, and I think this falls in the whole energy theme that I think most investors are frustrated with the energy sector. It's a real sector that didn't really do anything last year, and we had such a big year in the TSX led by the banks and the gold companies. But energy was kind of forgotten, and I think it's going to be something that probably should be on everyone's radar, and people should start to look at these because the energy stocks have really done a good job in the last few years, really cleaning up their balance sheets, getting their operations done more efficiently. And between ARC and Tourmaline, these are some of the best-in-class operators operators in the natural gas space, and they do trade kind of in tandem. And I think people that are owning Tourmaline are basically have the same sentiment as ARC, is kind of frustrated just how the last years went. But these again are companies that are doing quite well, good balance sheets, good growth prospects. If LNG export terminals do start to come onto line, we're going to start seeing pricing keep going. And I think these again are companies that are set up, and with the AI power demand going, all energy sources are going to see demand uptake, and natural gas is going to be required for this. So
yeah, especially in the short term, right? They're talking about natural gas being one of the ones that's going to power everything.
Yeah, and we were just talking about Talon doing a deal on the natural gas to try and get some of that. So natural gas is a commodity that didn't really do too much last year, but I think it should be set up well. And between ARC and Tourmaline, these are two best-in-class companies, and probably something that you don't want to give up on yet, and it's probably could be set up for a decent turn this year.
Yeah, and I think natural gas price, I thought I saw one that's saying it's supposed to jump nicely this year.
It should, again, and demand for power is going to keep going higher. And again, there's not a lot of supply out there that comes on, and people and companies are just being a little more efficient. They're not going out and doing a lot of exploration and just making sure everything's run a lot more effectively. And ARC and Tourmaline are two companies that are doing this, quite well.
So does it feel a little bit like it's the calm where they've been setting everything up before the storm, but a good storm?
It is, and I think once you get potentially some of these trade deals done, and potentially people coming back to Canada, maybe Americans coming back to look at the Canadian energy sector, these are companies that are really well set up for this. There's not a lot of risk on them, and in the meantime, they do also have decent dividends. So they have a decent little yield here, so you get paid to wait, and the setup is not too bad right now.
Okay, let's move on. This next email is from John. He says, "Good morning. How does MDA rank on your buy list? They're getting a lot of new contracts with the government, and they have a large backlog. Also, that's the one we were talking about earlier. Yeah, those contracts are starting to pay off."
Yeah, and MDA is set up really well. And this, again, goes back to the defense spending theme, that there's just so much money that's going to be put into defense spending in North America and in Canada in particular. And everyone's going to be looking for exposure to this. And MDA is one of the great ways to play this. It's certainly volatile. There's really lumpy contracts. But as you're seeing more defense spending coming and more spending done on space, this is a company that's well set up for this. There's talk about building a golden dome in the U.S., another missile defense sector, and MDA is a company that's really well positioned to get some of that business. And these are going to be big numbers, and these are going to be contracts that go on multiple years. So, yeah, it's a volatile stock, but it looks set up right here, and I think the pricing is looking fairly attractive right now. So it's probably something that's going to be lumpy, and it could be some volatile, but it's not a bad setup right now. And again, plays perfectly into the defense theme, which seems like it's going to be here with us for a while.
Well, and I imagine with the Canadian government, the spending they're going to increase, they're looking for Canadian companies to spend that money on.
Yeah, and that's one thing that all other countries seem to do, it be more favorable to their own companies, and Canada needs to start doing it too. So these are Canadian companies that are best in class, and we might as well start supporting them and giving them some business.
Yeah. Any other similar ones to MDA?
Well, Telesat's not a bad one. Again, we touched on that earlier. So another Canadian company that's working in space. So between MDA and Telesat, I think they play perfectly in the defense theme. Bombardier is almost a bit of a defense play as well, and as they're starting to get more into that area. So Canada's got a lot of good companies in this that can take advantage of the defense theme, and I think they're just starting to pop up on the radar again.
Bombardier seems an interesting one. It kind of trying to figure out where it is sometimes, it feels like.
Yeah, it's a company that's done a massive transition in the last few years, going from trains to bigger planes to now focusing more on smaller jets. But it's still got some great products out there, and also can pivot towards the defense industry as well. So these are companies that are doing quite well, have good global products, and I think are coming back on the radar and getting rediscovered and re-rated also.
Okay, and we'll go on to Glenn now, and this one says, is now the time to buy Canadian oil and gas companies, or is it time to sell them overall? There's a broad question for you.
It is, and that's probably the big question, again, tying back to just what we were talking about on ARC and in particular, is because this is a sector that really stood out as lagging last year. It didn't do a lot, and then I think a lot of people were frustrated, especially when the TSX had such a big year, up 30%. So everyone's looking at this and trying to figure out with C&Q and Suncor and Cenovus, what's going on with them. And it does feel like this is not when you want to give up on them. They're really companies that, again, you want to look at things that have lagged and see if they can get a re-rating. We're hearing more and more about American investors starting to look at the Canadian energy stocks because they are trading at a turn lower than the American companies. And as global demand keeps going, now we're certainly some volatile. We saw oil down 5% this morning with apparently peace in Iran, which who knows how long that's going to last. We'll check in a half an hour.
I got to cut you off there. We want to get one last story in before we wrap up for the day, and it's Of course, the visit by the Prime Minister to China, a historic moment it's being called, first time in more than essentially a decade. Trade, energy, and agriculture all on the table. But what many Canadians, of course, are looking for is movement on agricultural tariffs. CTV's Annie Bergeron-Oliver has more.
It wasn't long ago that Canada called China a disruptive power. Now the language has softened as Prime Minister Mark Carney's government looks to bring stability back to a frigid diplomatic relationship.
This is a new government with a new Prime Minister, a new foreign policy. In this moment of economic stress for our country, it is necessary for us to diversify our trading partners.
And Carney has made it clear that rethinking includes increasing non-U.S. exports through deeper partnerships with countries like China. And over the next few days, the Prime Minister will be pitching Canada to business and government leaders as a place to invest.
I think that this was a really important opportunity to reset the relationship at a time when we're obviously dealing with a much tougher United States and where our Canadian national interests have to be rethought.
A key area of debate and likely disagreement, Canadian tariffs on Chinese electric vehicles and Chinese tariffs on Canadian canola products. Government officials say it's reasonable to expect progress on so-called trade irritants, but the definitive removal of tariffs is unlikely.
Our ultimate goal is to restore market access to China, have more smoother, predictable trade with our number 2 export market. And so we're looking for signs of progress and resolution on that front.
This trip is all about getting business investment. So far, there are no cultural or heritage events on the schedule. Carney will spend his first full day in Beijing meeting with business leaders. Then he'll transition to China's Great Hall, where he'll meet with government leaders, including the Premier, and participate in 2 signing ceremonies related to energy and climate change. Omar.
And that was CTV's Annie Bergeron-Oliver. And that is it for us here on The Street. Many thanks to Reg Taylor for braving the snowstorm we're getting in Toronto right now. He's the Chief Investment Officer at Penderfund Capital Management. Thanks for joining us. Annie's up next with The Open. Have yourselves a great day.